It's Monday, the fourth week of March. We still have 5 days left to go, where we can capitalize and bank some profits for the week to end up the month pretty profitable, pretty green. And therefore, my current situation is that I'm up for the week. Last week, 3%. So my intentions for this week will be to have some pretty nice trades, or let's say a trade which will be an prediction of a daily candle expansion, more so than a scalp trade. I do not need really to scalp on the last week of March. I also do not want to do it due to a stress factor which I'm currently more so having. So therefore what I do want to have is a very high probable trade. So what I'm gonna do in that analysis today, I'm gonna look out for a pretty high probable trade and explain why I personally would look out for that one trade, which would be a daily candle expansion, which you can predict through the candles on the daily. So to quickly have that overview, we can start now to quickly have the overview of the higher time frame. If you do still remember, on the weekly, what we are having is basically that liquidity buildup where the price has accumulated before mitigating into that bearish objective. That bearish objective has been the lower high to that lower low. On the monthly, it's a bearish expansion, where the extreme territory is sitting at, with that break and test below as liquidity target, which looks pretty nice for price to give reactions from there, or sellers to take over control, as we did do that at the end. So to do more things structured for today, as people wanted to have more structure, I'm sorry, I'm not the best in teaching. This is also something you need to learn, but to have it more structured for you to understand what I'm actually doing is, I'm firstly starting with the higher time frame, where you will need to look out for three things basically. It's your structure, it's your POIs, and it's your liquidity. First of all, your structure. You want to find out with the structure your current direction on the higher time frame, your directional bias. If you have your direction bias, you go over to POIs. POIs will be important for price to interact at, so you do want to mark your PIs and look how the price is reacting from there. You have several PIs which you can mark. The most important ones are gonna be the structure ones. It's the extreme of a bullish or bearish main push. It's the decision of a bullish or bearish main push. This will be the structure relevant PIs, from where we definitely can expect the expansion and continuation towards the expansion, completing the efficiency of the pullback. Basically, I'm calling it completing the efficiency of the pullback, since from there the complex pullback which we have created should be done in theory. It can be different, definitely, but this is how you will need to react towards the markets: through liquidity, through inducements, through expansions, momentum, through candles on the daily, which you will need to read the closure of the candles. You also will need to basically dissect the movement of the price, and therefore just the whole interaction. But you expect in theory expansion from these structural relevant POIs, which you're gonna mark. Then there are still a demand to supply to demand POI, which can act as a decision in theory, which can give also pretty nice reactions. And from there on, what I'm still marking are internal POIs, demands and supply areas, where price can definitely make a reaction, since the POIs are reactionable, but you still will need to dissect it, as the most of the time these POIs can become smart money traps, where you will need a pretty nice formation to confirm smart money traps. You will need a mitigation into the smart money trap, a build up, a reaction from the smart money trap, a inducement towards the downside, and a follow through towards the upside. This will be your confirmations for a smart money trap to be broken, and where you can be pretty sure. And hopping on and then there will be the trap POIs, which are basically already in theory smart money traps. That's gonna be selling from higher highs, buying from lower lows, where you can definitely expect a reaction as well on the high time frame. But you should be careful, and at the beginning you definitely can avoid these kind of POIs, as you do not need that scalp trades. So continuing with what I was saying at the beginning on the higher time frame, we start with the structure, searching our directional bias. Then we go to the POIs, where we need to or need want to dissect the reactions and the interactions in price, and then we come to the liquidity. Liquidity will be important to read the targets, the inducements, and who is actually in control. So starting on the high time frame quickly, very high time frame, which we're not gonna stay very long. We do want to start to read our structure from our lower high, to our lower low, which has been creating through that inducement a complex pullback, breaking internally structure, coming to the 50% of the last bearish leg, which has been from that lower high, inducing structure and changing momentum towards the lower low. So having that in place after the 50%, we have pushed out into the complex pullback. We have respected the low low, building liquidity towards the downside, price pushing higher, which would have been pretty accurate and very nicely from a liquidity cycle if we would have induced that previous first tap of that bearish block, and after the second tap here, a expansion would have been very nice to read. But price didn't, so this could be potential open liquidity for price to target, since we do have pretty nice objectives and areas, since the break and test here as printed, and the break and test with the bearish block here, which can give pretty nice reactions. I do think that's more so a long-term projection, so it's not important for you guys right now. It's just my thought process. But anyway, starting with our last bearish leg, it's been that lower high to that lower low, which has breaks that previous lower low. In that sense, we do now our push on the monthly, which is still not important, as we do want just to dissect the daily. I'm just telling you all of that to connect the story. So after we created that lower low, price has pushed higher, starting the retracement. After we have that accumulation in price, that range, price has induced low after building liquidity. After that inducement, change of momentum has been initiated, and through that expansion we can see that we are having a few fractal main pushes, that being our weekly push from that higher low to that higher high, which has been currently created. So what we do want to take in consideration are two things on the higher time frames. Okay, the first one is gonna be, we have that break test bearish objective extreme territory, monthly extreme, which price has come to. So this PI can lead into a reaction lower. And the second thing which we're going to take in consideration is, and especially because of the liquidity cycle we were having build up, inducement of previous week's highs, and mitigation lead to a expansion. So every time you're having a build up, a inducement of a medium structure which needs to be relevant, Asia low and Asia high, for example, will give you shorter expansions, and after a inducement and a mitigation, you can expect definitely a deeper reaction and expansion. So in that sense, we're having our build up, inducement, mitigation, we can expect the expansion. Now the second thing is gonna be towards where do we can expect expansion. So as we mentioned, the weekly bullish push from that higher low to that higher high, we are having two main structural PIs as we have talked about, being that decisional, price pushed higher after changing momentum and buyers taking over control through inducements. We are absorbing supply. After that reaction, we break higher and breaking the last previous high. So therefore, this is gonna be a structural supply to demand decisional PI with a break and test objective, since that bullish block has been tested already. So this is what we're gonna mark with that break and test. So any cycle towards the downside and a retracement into that PI can have a pretty nice cycle, and a continuation or expansion towards the upside from where buys are gonna be pretty nice and pretty cool. As well as the extreme, as we talked about PIs, we were having the extreme. So what I just want to say with that is that this liquidity cycle can lead to a retracement towards that weekly push, as it makes a lot of sense fractal wise. So what we're currently having, and now coming into the important things, just to define the targets are gonna be the retracement into that bullish weekly leg, especially first target being that break and test objective with the decisional demand, from where I would expect pretty nice buys. But I mean, price can also return from here depending on how price is interacting with the PIs, as we do have power sensitivity areas here. For people who are following Wakar, I am more so just what I want to explain is you need to be careful, because VVA WWA is interacting with two main mentors, which has been Alex Garcia and Wakar Asim. Wakar personally is more so taking or considering a style of being pretty scalped into the markets, reading the inducements on them, one, the mitigations, the interactions, the reactions, cause and effect, which is pretty important. I do have a lot of documents written about all of that, since I have been in VIP, as I mentioned. I was a student. So if you do want me to share a plan, what is really doing accurately, what you can follow, I can do that. You just need to comment. Mm, and then there is the style of Alex Garcia, who is more so into reading higher time frame, connecting the candle closures with the cycles, and more so following a strict structure with models, as we're trading reversal and continuations. Well, sometimes market mechanical, but that's not important for you. But mainly it's gonna be the reversals and continuations. And through reading the candle closures on the daily, you already can expect and project a daily expansion, which you can capitalize on. Connecting with that with the lower time frame being the models, like connecting it with the models on the lower time frame, where you need to read the direction condition, you're gonna be able to capitalize on a daily expansion candle. Um, so what I want to say with that is there are two different styles of them. I do not know which one you prefer, but both are the same at the end. I personally have found my mix with Wakar and Alex, and therefore I can share both. You just need to say what you're preferring. I personally prefer Alex, as it's more so um, how would I say, more so structured to follow, where Wakar is more so trading market mechanical. I mean, he's following continuations and reversals as a model, but for him it's more so market mechanical, um, since he's more so scalping. So coming where we have continue with our analysis, basically again coming now into the daily, where it's pretty important now, where we're gonna use our three pillars which we have talked about, our structure from that high low to that higher high. That higher high was an inducement into a mitigation, which has caused a rejection towards the downside, then a mitigation to the daily bearish block, a second leg and expansion towards the downside, breaking the higher low of the H4 structure and breaking the higher low of the daily structure. So now, first pillar we have finished. We know we are bearish. Our directional bias is bearish on the higher time frame. This is what you're gonna write. Our directional bias on the higher time frame is being bearish. So nothing else. Just do not fuck up some things. Our directional bias is bearish. Okay, after having that, we continue with our PIs. Now our PIs from that lower high, as we have mitigating that monthly FC, has been a pretty nice extreme to the upside, which is a bit more complex, as we do see mitigations and some liquidity still being open, but I do not think price will come up there. If price do so, we're gonna react now, because if, then it's gonna be now. Since we have started a bit a range, I do think we can start a range as we're interacting with higher time frame demand and supply, which can cause in price a range and then a breakthrough either higher or lower. But just to finish up our PIs, we are having our extreme territory up there, and a pretty important structure relevant PI is gonna be the last pullback, which has taken an engineered high as liquidity, and that fuel of that inducement higher was the expansion towards the downside, breaking that last higher low. So therefore this is going to be our decisional supply, and do remember a decisional supply can push price lower and extreme can push price as well lower, since these are important structure relevant POIs. But now, pretty important, this is our daily, and to finish up with the liquidity, we can read our inducements. We do see price came up higher with expansion, having that first inducement, a follow through, push higher. Since then we broke that previous high, which ended up price pushing lower into demand, absorbing, pushing higher, reacting from the demand failure to create a high and a push lower, internal break towards the downside. We have that mitigation and started a complex pullback, more so building up liquidity towards the upside. Since we take that break and test liquidity towards the downside, mitigating into that IFC, which has been our extreme area from that higher low to that higher high, we can expect expansion, price pushed higher, absorbed supply, reacted from it, failed to create a low, and pushed again higher, breaking structure. From there on, we were mitigating that higher high as we were bullish, so we expected already to be a small money trap. Price reacted from there, induced lower, and pushed higher. This was the trinity I was talking about at the beginning. You're having into a smart money trap a mitigation, a reaction, a build up, inducement, and the expansion towards the upside, which is confirming you're the smart money trap. So now coming into the current state, since we have taken a lot of highs, mitigating into a monthly territory, inducement high, push low, mitigation. From there, sellers took over control by breaking structurally the higher lows or the higher time frame structure. So we do see sellers are currently in control inducement wise, but very important now to dissect is gonna be after taking that higher low, which has been also a major inducement, we have mitigated into pretty nice higher time frame demand, which is a buyer sensitivity candle. Now, very important here to see is price pushed higher, reacting from that demand, pushed lower with a nice cycle by inducing previous day's high. So this engulfing should have had already the follow through actually on the high time frame, but it didn't. Price respected, failed to create a low, more so respecting the demand and having that cycle towards the downside, which you're seeing here within that demand area, which should have been a smart money trap. This is where we capitalize basically. Price induced previous day's low, and by inducing previous day's low, we had a cycle towards the downside, which caused price a very nice bullish expansion towards the upside. So this is what I'm telling you. This is how you capitalize on the markets. This is where personally I took my buys, which you're seeing here. What I was expecting, I was seeing that bearish pressure with previous day's high inducement of the candle closure being an engulfing bearish one. But I do know, since we were on a higher time frame smart money trap, that this cycle which you're seeing here, this previous lows inducement of the candle could have give you a reaction from that higher time frame demand to then after the reaction push lower. So this is what I'm capitalized on, not on the full move on the expansion, as it wouldn't make a lot of sense. But I capitalized on it, and this is basically how I'm projecting my daily candles. But now to come back, what I want to say in the daily is buyers took in a way control from that higher time frame demand. So this is why this supply, although it's being a decisional, can lead into a range by inducing and mitigating that higher time frames demand and mitigating into that supply. This can be a range, definitely interacting with supply and demand, which price can break out towards upside or downside at any time. But this is what I'm more so projecting for the week. So to finish up the higher time frame, important things are gonna be the directional buyers, the POIs which you're gonna mark. Important ones for now, since price is interacting, is gonna be this decisional and the higher time frame demand. So we do want to interact and see who is gonna take the control. For now, what I do see pretty nicely is after having that previous low inducement and expansion towards the upside with a bullish candle, this bullish block here has been already tested once last week on Friday with that candle. After having that first test, price is having currently the second test, a second tap into that bullish IFC, and we know after having that second tap, price is building liquidity towards the upside. This can lead into a pretty nice pull up towards the upside and expansion candle for today's session and price action on Monday. This is what I'm telling you. So this previous day's low inducement can now lead into a pull towards the upside. The daily candle closure leading to close pretty bullish in that sense towards the upside. So this is what I'm telling you. Why do I think that? I think that firstly because we're building liquidity. I mean, you need to interact and see what price is showing you. Since we have already taken buyers taking control from that higher time frame demand, price pushed higher, already reacting, failing to break that low. So buyers taking over control after having that bullish. I've seen that expansion towards the upside, which would have been pretty nice on that supplier to give me a lot of conviction. Would have been a previous day's high inducement, which would have been a cycle like this one or like this one. If we would have that with a follow through, this would have been giving pretty nice confirmations to sell from that supply. But since we're interacting from demand and supply, this is more so leading into a range. So I do think price is showing signs through that mitigation and no cycle towards the upside, more so building liquidity, and the second tap being the previous day's low inducement gave me conviction that price now can expand higher. So this candle closure will be pretty important and interesting. This is what we can project for today, potentially going higher. Sells, I'm gonna not sell until we have that inducement high, to then have new cycles towards the downside. So this is my projection for today. It's gonna be the mitigation, the second tap of that bullish block. After the second tap, a potential pull higher towards the upside, projecting the candle to close bullish. So you see I'm still in the daily, so there are a lot of informations to gather and to take in consideration. Now coming into the M15 or to H1, we do see that internal lower time frame direction, which has been bearish. Since we take that liquidity, price has a inducement towards the upside. After the inducement, internal break of structure, then the mitigation. After the mitigation, push lower, breaking that external M15 lower low. But now important things to mention: after we had that major inducement into the mitigation, buyers are taking over control, inducement low leading to a push higher, absorbing supply, reacting, failing to create a low, a push high internal break. We're mitigating into a potential smart money trap, building liquidity, inducing something towards the downside, which is giving you a pretty nice follow through towards the upside. So we do see buyers taking over control. On that POI, we had a pretty nice cycle, which we're seeing here, previous day's high inducement, which lead into a very bearish reaction, but price failed to create a low, more so that inducement took over control towards the upside. After mitigating that supply, price absorbed it, pushed lower, reacted from it, and broke internally structure. So we do see our internal last push is going to be from that higher low to the higher high here internally. So after we see that buyers took over control from that higher time frame demand, I'm aware of the fact that this supply area, especially with having no cycle, just one top here, and that build up, that this can be potentially a more so gray zone, smart money trap, and that second tap, that cycle to the downside into that decisional supply to demand, which you're seeing here as our internal push is this one, can lead into pretty nice expansion towards the upside, as we mentioned that already. So you're seeing it more and more clear on the lower time frame if you get deeper and deeper. So what I'm gonna expect for today's session, as I already mentioned, is gonna be after having that build up, that first mitigation into that bearish objective, and a push lower and low previous day inducement into that supply to demand, which induced low and had a follow through, so a very nice candle from where buys can be expected. I personally would like to buy from there, but what we do see here is price already induced at low previous day inducement into that demand area and pushed higher into the smart money trap, as I was expecting it, being the first more internal supply, which led to that low previous day inducement, push lower, failed to create a low, and continued higher. So the problem is price already gone. So I do not know if I can capitalize on today's session on that, but we will see basically. we will see how price develops. But this is what I'm expecting. I'm expecting personally also, if we mitigate here, to have development within this structure and push higher with the expansion, or maybe potentially take out that structure internal medium reduced at low to continue higher. So these are some roadmaps which I'm gonna take in consideration. Sells I'm not taking in consideration since the market is not showing me that hand, showing me more buyer's hand. Due to the mentioned facts, I can do the analysis more accurately on the lower time frame confirmation with inducements, with telling you also what to look for. For example, on the lower time frame, we will be looking for your intraday structure on the M15, internal external structure. You're gonna look for your PIs, your targets, your destinations. There are some PIs which we could mark, which I'm not having in the charts as I do not need it. I'm also seeing it without drawing it into it. And you're gonna look out for liquidity and a lot of small things which you can definitely mark. But if you do want a more accurate analysis, and if you do want me to really structure my talking for you to learn and really have the ability to gather the informations to get better, because right now I'm just analyzing as the session is starting in more so 8 minutes, but I can do it more accurately. You just need to comment, and I'm gonna definitely do it more structured. But these are just, if I'm teaching someone who is not that good, he does need more information for sure to understand the markets. But me basically already seeing such price action, I'm already knowing what I'm gonna look for, what is the possibility, the opportunity, what to not look for, what to look for, when to wait, where to interact, and all of that. But the most important thing on the M15 is that our direction in theory is bearish, since we have that lower high to that lower low. But from that higher time frame, we see buyers taking over control through two bullish legs of structure. So this is why I'm telling after that build up and the mitigation, which looks pretty iffy, not a lot of momentum. This, after having the first step, second step can lead into expansion towards the upside. Now this is what I'm looking for. If the price would be here, I would look for sells. We would have a pretty nice cycle, inducement, and a follow through. But the price isn't. This is what I'm gonna look for. So that's it. Let's go into the session, guys.